The broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can actually dominate the markets with at least 87% winning accuracy. I want to thank you for taking time out to join me today. And this is crazy weather in parts of the country. Right now I have no water and I am running on a power generator here in Texas since we have no electricity. So I am very committed to having this work for you. I would like to have you know that by the end of today's presentation, you can replace your subjective discretionary trading with consistent winning results. Now, before we get started, I would like to make sure you can see and hear what I'm doing. If you would, look in the top right corner of your main monitor and you'll see the Go to Webinar control panel. It's a little vertical strip with a few buttons. Go to the topmost button and click on it. It's a left pointing arrow. It's yellow, I believe, and it'll reveal a hidden window. Click inside the window and type something and let me know that you can see and hear what I'm doing. Okay, great. I don't know what you mean by Schuster Trader by system not working past 4:30. No clue what that means. Thank you very much for your feedback, everybody. I want you to use this to ask me questions throughout the presentation, or probably best is give me a chance to lay out my case for what I believe is going to give you the 87% accuracy that you're so interested in. And then certainly you're going to have a lot of questions at the end. Okay? Okay. iPads can't speak to that. We will get to the recording thing, folks. Like I say, if you'll bear with me, I'm going to go ahead and jump right in so we don't waste any more time. First of all, that's me. I'm Michael Guess, and I'm the president and CEO of TradeSafe. And I want to thank you for taking time out of your day to join me today, since a lot of you, myself included, have had some really horrific weather situations. And I'm going to try to make it worth your while. By the end of today's presentation, I promise that three things will occur. First, you're going to know how you can replace uncertainty in your entries and exits with consistent winning trades. And I'll show you exactly how you can do that without question. Second promise, I'm going to actually give away a lot of free trading tips. I'm not just here to do a dog and pony show. I want to show you, to answer one guy's question before I even started, he said, hey, what time frame settings, chart settings should I use, and so on and so forth. I'm actually going to show you that, so stay tuned. Okay, that's one of many things I'm going to give away today. And then finally, I'm going to show you what it takes to achieve what I call the real holy grail of trading, consistency, because I'll bet none of you are totally consistent in your results. I don't mean winning every day. I mean at least a nice smooth equity curve. And that means you got to be a winning trading machine, taking trades without hesitation, nor being impulsive and digging a deeper hole and doing revenge trading, for example. So I promise these three things by the end. Now, why am I qualified to make these promises? Well, I've been a professional day trader for over 25 years. I've accumulated quite a bit of experience along the way, and about 20 years ago, I started TradeSafe for the purpose of sharing this knowledge, sharing our trading system, and providing personalized coaching. Along the way, I've also created a lot of custom indicators, other trading systems, but I'm going to share with you our premier trading system today, and you'll see exactly how it works, and you can decide for yourself if it's really a good fit for you. But one of the things that I did a long time ago, before I got into trading, I was a psychotherapist. And that gives me a lot of experience on dealing with what I believe is one of the biggest problems in trading today. Trading discipline or psychology, whatever you want to call it. And I will address that. So there's also some additional credentials I'd like to speak to. Way back in prehistoric trading times, back in the late 90s, we had this thing called the dot-com bubble. How many of you remember that? Type Y if you do, because we had a huge amount of volatility. The market was going sky high, and it just seemed like it would never come down. Does that sound familiar? Yeah. Well, it did blow out. And before it did, the volatility was horrible. It was really difficult to deal with. I learned what not to do during those conditions. And that's what fed me the information I eventually evolved into the trade safe system. Go forward another 10 years and we got the big recession. A lot of us suffered a lot during that, but the trade safe system did not suffer. It continued to crank out profits without hesitation. Now, along the way, I have coached over 4,000 students who have successfully graduated and have gone on to make consistent profits. Now, somebody asked me, hey, is this being recorded? Yes, it is. I don't want you to leave, though, because I want you to be able to ask questions in real time so I can answer them for you. Okay? It's a whole lot more valuable than watching a replay, although I will be providing that in an email, and it'll be a link to the replay later this evening. Okay, I'm just seeing what somebody was saying. Yahoo, I guess I'm not sure whether you mean Yahoo, uh, the email provider, or something else, or if you're just excited. Let's go ahead. I want to also let you know that in emails following this presentation, you're bound to still have some questions. You may not think of everything or get all your questions answered here today, but what if I could tell you that you could actually, instead of talking to a salesperson, oh, don't you hate that? You could actually talk to the developer himself, me. Yes, I have a real-time team. We are a corporation. I'm not somebody who operates out of a garage. We've been doing this for 2 decades or more. We're a full corporation. However, I want you to be able to talk directly to me and get your questions answered. So I promise I won't twist your arm or act like a salesman. I will answer your questions truthfully and candidly. And that way, you'll feel that your time was well spent. I'll give you a full hour of my time, so stay tuned at the end. I'll tell you more about that. And of course, you will get a link to seeing my calendar so you can schedule some time with me. Okay? Oh, David is saying Yahoo was one of the dot-com bubbles. Yep, for sure. Okay. Now, before we dive into the content here, I'm going to spend as little time as possible, but it is required. And other vendors don't do this. The FTC, that's who regulates the internet, by the way, they say that nobody is allowed to make any kind of financial promise or guarantee. And I'll bet you that all the webinars you've gone to, people are making all kinds of guarantees and promises and things like that. They're actually breaking the law. And I don't want to run risk of doing that. I've seen what happens. It's very expensive. However, I will share with you our very real world trading record and what you can realistically expect. I think that would be a fair way to address it. The other thing is, if there's any newbies in the group here today, I want to remind you, please don't trade with money you can't afford to lose. Why do I say that? This. Who remembers the GameStop thing that was in the news a week or so ago? Type yes if you remember that. All these wannabe traders, people who probably didn't even know anything about trading, they picked up on it on Reddit and they rolled the dice and maybe made a whole bunch of money, at least on paper, overnight, only to be shut out and find out that GameStop and other brokers were preventing them from adding to their positions or doing anything except getting out. So that's launched a whole bunch of new legislative inquiries because that's not trading, it's gambling. Or it could be a form of social protest. You know, you want to do a short squeeze and put one over on the big boys. Well, I'm hoping that everyone here today has serious intentions of being a serious trader. And if you are, then you probably already know that there are some real big disadvantages if you want to buy and hold on to something. Yeah. Well, that means if you buy it today and you're still in that position tomorrow morning when you wake up, well, there's a lot of disadvantages. Let's look at some of those before we move forward. First of all, it costs a whole lot more money to play ball if you're a position trader. Tens of thousands of dollars. Now, if you're a day trader, it can be a lot less. Of course, if you want to day trade the stock market, which in my opinion, I do not recommend the stock market, believe it or not. I haven't traded a share of stock in over 20 years because the institutions have completely ruined the stock market with high frequency program algorithmic trading and a host of other problems. But if that isn't enough, it's $25,000 is what the SEC says you need to have in your account just to day trade the stock market. But if you're going to look at other things, you know, maybe futures, commodities, you could open an account with $500, for example. We'll get to that later. But here's another big disadvantage of position trading. Let's say you started a position, you bought or sold something today. You got to wait till tomorrow to find out if you got knocked out or if you're making a little bit of money, maybe. And overnight, you're going to be stressed, especially if you heard there's some bad news that might affect your position. You got to wait for the open. So these are problems, but here's something a lot of you don't even think about: accuracy. You know what? The further out you hope to keep in your position, like days, weeks, or months, the lower your odds are of getting a winning trade. In other words, accuracy diminishes inversely with your time horizon. So the further out you hope to make money, like, oh, I hope in 6, 8 months I'm going to be a bajillionaire or something like that, the odds aren't really that good. On the other hand, if you want to predict what's happening in the next 15 minutes, you can be deadly accurate because the advantages of day trading are seriously better than position trading. First of all, the margin levels are far, far below. I already told you, you could even open an account for about $500 if you wanted to day trade, for example, S&P, Dow, NASDAQ, or Russell. Those are the big four indexes. Now, it all depends on the broker. If you're going to someone like TD Ameritrade, they will soak you. But if you go to a broker like NinjaTrader, who is the platform that I use for my software, that's the day trading software that my stuff works on, they are also a broker and they only charge $500 for each contract that you trade. And a contract has close to $100,000 worth of buying power. And you don't pay a penny's worth of interest for all that leverage. You get 20 or more to 1 ratio. Plus, you are in constant control. You don't have to worry about, oh my gosh, now that I'm in the trade, I got to wait and see what happens. No, you don't, because these trades are over in just a matter of minutes. And since you're out of all of your positions by the afternoon's close, you can sleep peacefully. You don't have to worry if there's bad news because you're not in a trade anymore. And let's look at that thing very few people do: accuracy. At the very beginning, I said you can achieve up to or more than 87% winning accuracy with the trade safe system. Now, that's not hypothetical. That is the lowest number that any of my graduate students have achieved in the last 2 years that I've been tracking that statistic. So how would you like to have 87% winning trades? Type yes if you would like that. Yeah, for sure. So 87% is a real world possibility, not some kind of hype. And I'll explain as we get further into the presentation how we arrived at that number. Last of all, consistency. I said near the beginning of the presentation that the real holy grail of trading is consistency, not some super duper indicator or whatever somebody's dreamed up. If you really want to make consistent money, you got to run it like a business, and every business needs some kind of consistency. So your trading needs to do that. If you can have consistency in your trading, then that means the money that you work so hard to get will now go much further because you can spread it around and trade some more markets. You don't just have to focus on maybe one market like the Dow index, for example. You could trade the NASDAQ or the Russell, or you could trade a currency like the euro, things like that. Now, I know some of you are still kind of holding out. You've been thinking in the back of your mind, yeah, Michael, but you haven't talked about this or that I've heard that is a bad thing about day trading. Yeah, well, there are some myths. First of all, it's complicated. It can be, but the trade safe system is not. I taught an 8-year-old boy how to use this system. It is that straightforward. You do not need rocket science to make this work. Oh, here's another one. You got to have the reflexes of a 20-year-old and treat it like a video game and shoot anything that moves. No, you don't. Not with this system. With this system, you are treating it more like a chess game. It's strategic. You are waiting for the conditions to be met, and then you park a resting order and let the market trigger the trade. It's sort of like laying a trap in the jungle for the tiger. You don't want to chase the tiger. That's bad. You let the tiger come to you on your terms. Here's another one. Oh, I really don't want to do day trading. I'm going to sit there all day and get hemorrhoids and eye strain. That is true. You can do that if that's what you want to do. And with a lot of other approaches, that's what you have to do if you want to make any money. With the trade safe system, and I will show you exactly how it's done, you can actually make part-time trading a possibility. And this is a possibility because of something called trading cycles. That means you don't have to sit there and stare at your screen all day. Part-time trading is now a reality. So even if you have a job, you can squeeze this in. Now, you will want to talk to me if you've got a job and you would like to try this. At the end of the presentation and afterwards in the email, you'll get a link that will show you how to schedule time with me. I already mentioned that I won't twist your arm or try to make you buy stuff, but I will help you find out if it's a reality for you. Because I've had several students, many students in fact, who have even held full-time jobs and still managed to make day trading a part of their life. But realistically, most of my graduates, they don't spend all day sitting there. They just like to spend part of the day. Here's how they do it. You see that camcorder on the right? Well, it's got a zoom lens, and that lets you zoom out and zoom in. When you're all zoomed out, you get the big picture, the wide angle, you see more. You zoom in all the way up close, you see the details, a lot of granularity. You can do the same thing with charts, just like it shows there on the right. You change the chart settings. The higher the chart setting, the more like a wide angle picture of the market you get. The closer up you get, the smaller the chart setting, or time frame as I call it, it needs to be. And I'm going to give you the actual chart settings that we use for particular markets that I would recommend you start out with. Now, not every market is going to have the same settings. I'll explain why in just a little bit, because not all markets are the same. They have personalities, just like you and I are different, so are the markets. You want to be able to adapt to what the markets can give you. And you can do that with ratios. And that means you want to avoid a single chart approach to day trading, because there is no such thing as a single chart, one size fits all, that will let you do that. What you need is a custom tailored approach that'll let you not only determine, hey, do I even have a trend? Because the trade safe system is, by the way, a trend following system, nice and straightforward, no complications there. But you want to also know, is it a strong trend or a weak trend? Because that will help inform you, what is the market capable of giving you if you get a setup for a trade? Because with ratios, you will need to know whether or not you want to, I'll use a baseball metaphor, if it's a weak trend, you'd bunt and get on base. That would be the equivalent of a scalp. You just go for a little quick pop and you'd get out very quickly. You only want a few ticks. On the other hand, if you got the wind at your back, and I'll explain what all that means, and I'll give you the conditions for it in a little bit, you will swing for the fences, and you would use another type of exit strategy I'll explain more later. So, David asks, does NinjaTrader charge for the data feed? NinjaTrader will accept 12 different data feeds. So if you've got a data feed that you already can get and it's one of the 12, then you're good to go. They have their own, but I recommend one that they do allow you to use. It's a third-party data feed called Continuum, and they will let you test drive their software for free for a couple of weeks with that data feed. After that, they will require you to either start trading live or do something else. Now, when you do start trading live with real money, they eat the cost of that data feed because they're making it back, David, through their commissions. So the short answer is no, they don't charge for the data feed when you are trading real money. Okay? All right. Let me dive in here. I don't want to fall behind. With the example I'm going to give, even though this trade safe system works on literally thousands of different markets, and that means, yes, even though I don't endorse the stock market per se, it'll work on the stock market, any of those, as long as they have a trending personality. Yes, it'll work on Forex too, although I personally think that's a rigged game also. It's more meant for the banks, and you have a lot of things that you have to deal with. I'll be happy to discuss it offline if you call me. I don't have time to go into that here today. But I personally believe that if you look in the world of futures and commodities, you have fewer restrictions, it costs less to trade, and at tax time, you get treated far, far better. Every dollar that you make when you day trade the stock market is taxed at whatever bracket you fall in. That could be as much as 37%. On the other hand, if you day trade one of the indexes, like the Dow, for example, well, you get a 60-40 split. 60 cents of each dollar is taxed at the low long-term capital gains rate of 15%. And the other 40 cents is taxed at whatever bracket you do finally fall into. So you got a lot of good reasons to want to think about maybe test driving the minis, if you will. We're going to use them as an example here on the chart settings. Since someone asked me about those chart settings, I do have that built right into this presentation. And let's go ahead and start. Here's how it works. This is a formula I'm going to give you, and you can try this formula out for other kinds of markets. It's done the same way. You're not going to get necessarily the same chart settings because each market is different. But here's how it works for the minis. You need to know when the market opens for the daytime trading session and when it closes in the afternoon. Now, the stock market on the East Coast closes at 4 o'clock. The futures, that is for the minis, these indexes, closes at 4:15. So What you need to do instead of using the menu choice in your drop-down menu, by the way, if you're using Thinkorswim or some kind of amateur grade software for your day trading, forget it. You're taking a knife into a gunfight, as we say here in Texas. You really need professional grade software like NinjaTrader. In any case, my point is you will need to not use the drop-down menu choice that says daily chart. You need to create a daily chart out of raw minutes. So from the open at 9:30 East Coast and the close at 4:15 East Coast, that's 405 minutes. That is your starting point, your master number. If you're going to day trade the minis, no, you're not going to use that for actually trading. It's too big. It's really a daily chart. But what you will start doing is you'll take the next and the next and the next bigger numbers as you get smaller and smaller until you end up with your final three charts. The next biggest number that divides into 405 except for itself is 135-minute chart, still too big for day trading. The next biggest number after that is 81, still too big. If you maintain a 3-to-1 ratio, so you have that wide angle, normal, and close up, just like a zoom lens, 1/3 of 81 is 27. It divides very evenly into 405. And by the way, it's actually more accurate than a generic 30-minute chart setting that you have in your drop-down menu, which is frankly useless. But if you keep going with that 3-to-1 ratio, what's 1/3 of 27? It's 9, 1/3 of that is 3, and 1/3 of that is 1. These are the chart settings that you will want to use for day trading the minis. Your wide angle view of the market for at least half the day and maybe the whole day shows you what the trend direction is likely to be, is your 9-minute chart setting. Anything above that is really more appropriate for swing trading and not for day trading. When you drop down to a 3-minute chart, that's your dominant cycle. It's good for about an hour and a half or so worth of trend direction. But when you are wanting to take a trade, you want the lowest risk possible. So you want a surgical entry. That's the 1-minute chart. So you want that 3-to-1 ratio. However, I mentioned earlier, volatility is a serious issue these days and has been for over a year now because of COVID and the political mess that we have been in for some time. The markets don't like those things. The markets really like nice, predictable conditions. So I don't know if we're going to get lower volatility anytime soon. Maybe not. But here is an antidote to it. Instead of using a 1-minute chart, because when you have a high volatility situation, the average true range of that 1-minute bar is going to be probably too big for the risk that the trade safe system will allow. And I'll explain risk levels later. So what do you do if the risk level is too much for taking a trade on a 1-minute chart? You use a tick chart. Now, again, I don't have a lot of time to go into what is a tick chart if you don't know what it is, but let's just say instead of time and price, it measures volume and price. That's really an oversimplification. So many trades were occurring, and when those certain number of trades have finished, the bar is finished. So you can set your chart for, let's say, 144 or 233. Those are Fibonacci or Gann numbers. And that would be a tick setting that you could use. Now that I've shown you how to do this, please type yes if you understand the formula and how this works for being able to set it up for day trading the minis. And you can even try this out on other markets. Would you do that? Give me some feedback. Okay. By the way, if that is Tom Lee that lives in Colombia, would you type yes again? Ah, I haven't talked to you in a long time. Well, sometime I would love to visit with you. But right now I'm going to have to, yeah, and you've got great weather, I'm sure, compared to what I have. Well, let me keep going here. Folks, it's one thing to establish trend, direction, and even strength of trend, which I'll address in a few more minutes. But a lot of people always ask me, you know, I get caught in congestion and chop, and I take trades when I really shouldn't. Does your system keep me out of trouble? The trade safe system will keep you out of chop and congestion. Here's how. First of all, it'll give you alerts. Visually, if you look at the screenshot below, you can see below where the price action is, those bands of color. It's green or a salmon pink color for an uptrend or a downtrend for that span of time. And when there's no color, that's when it was in congestion. Now, these are algorithmically derived determinations, and you don't have to stop and think about it. It'll automatically be calculated for you and show you, as well as talk to you in plain English, anytime there is a change of trend. For example, your computer might say, NASDAQ 1 minute change of trend, or if it's going into congestion, it may say NASDAQ 1 minute new congestion. Or if it's breaking out of congestion, it might say NASDAQ breakout, 1 minute breakout confirmed. Instead of some dumb sound or something like that, you want something explicit. This will enable you to do the part-time trading I talked to you about. So if you don't have the conditions you need, and again, a little bit further, be patient, I'll explain to you what it takes to do part-time trading. And that's not just the chart settings, but what do you do with the trade once you're in the trade? So this is feeding into that. Let's say you don't have what is called trend agreement. This is what helps you determine the strength of the trend. Weak trend, strong trend, or something in between. If you don't have trend agreement, then you don't need to be looking for a trade for that particular market. You can switch to another market. And if you're monitoring of just a few markets and none of them happen to be trending the way they need to be, following the system, then you don't need to be sitting there staring at the screen. You can get out of your chair and go in the kitchen, fix a sandwich, or take a nice little break, listening for your computer speakers to tell you when you've got an alert and you need to come back and pay attention. If you like that feature, just type yes, because you'll be told when there is a breakout, a fake out, or any of the variety of conditions that we have regarding trend and congestion. And let's see what David is saying. He says, I know what ticks are, but not the 3 time frames. Oh, well, I just gave you the 3 time frames there. That must have been several minutes earlier. That was 9, 3, and 1, David. That's for trading the minis, and you use that same formula to arrive at whatever the appropriate 3 time frames are for any other market. Do you follow what I'm saying, David? Give me some feedback. All right. The point is, you will always have absolute clarity, no discretion, no subjectivity. You will always know precisely when it is time to be taking a trade. Now, beginners worry a lot about the entries. Professionals, they are more concerned about the exits. Let's face it, that's where the real money is made. So in this screenshot right here, we are in an uptrend. As you can see, it's green down below. And from off screen on the left, price had already been heading higher, and then it pulled back and retraced down to that moving average. I'll explain why that's important in a few more minutes. You can see the big red arrow pointing up to that bar. That's called a setup bar. It's setting you up for the trade. And what's necessary is for 4 steps to be completed. I'll lay them out for you when we go to our actual live charts with NinjaTrader, and you'll see me take an actual trade, okay? But the point I want to make is this bar, if all the conditions are met, you would park a resting order. It's called a stop limit order, so you have no slippage. And you will let the market trade through it like it did 2 bars later. It would go up through the resting order that was 1 tick above that bar's high. Once the trade starts, as you will see when we go to the live charts, It's automated. Everything takes over. You don't have to lift a finger. But what I want to call attention to is, since we have 3 different ways of managing and exiting your trade, no one size fits all, one of them allows you to trail a profit stop. That's what these blue dots represent. And it will adjust itself automatically all by itself in real time, just like a surface-to-air missile will adjust its rate of closure and its trajectory to reach its target. So if there's a lot of strength in the price rally, it'll hold back, give a lot of breathing room, and if price starts to fade back, like it did right here, it will rush up and lock in the profit. And as you can see, that's where price touched it, and that's where you exited the trade. This is done for you automatically. You don't need to know or guess where to get out. The system will determine that for you, because all your exit strategies are predetermined based on the strength of the trend. So as I said, you're either going to bunt and get on base, that's a scalp, or you're going to swing for the fences, that's called scaling out, which means if you've got a position where you've got huge, strong strength of trend, you don't want to waste it on a simple scalp. You want to take some of the money off the table, pay for the trade so you can relax, and trail a profit stop like it shows in the illustration on the right, and let the market take you out. That way you can milk it for all it's worth, because it'll adjust itself in real time. This gives you the highest probability of having that 87% win-loss ratio I talked about. Okay? David is now saying he understands the 1, 3, and the 9, but he doesn't understand tick charts. Well, I thought you said you understood what tick charts were. I'm just simply saying that we use specific settings in tick charts that allow you additional entry opportunities for smaller risk levels, because the average true range on my tick charts is very small. Did that help you a little more, David? We can go into that offline when you call me. I'll be more than happy to give you all the detail you want. But bottom line, everybody, you want this: consistency. I hate to harp on it, but that is your holy grail. If you really want consistent results, meaning consistent money, then you need a mechanical system. So let's go forward and look at a symbolic representation of a 9-minute chart. Let's say it's in a strong uptrend. Meanwhile, the 3 minutes meandering slowly in a downtrend, and a 1-minute chart just began an explosive rally. Well, they're not in sync with each other. Optimally speaking, what you really would like is for all of them to be trending in the same direction, whether it's up or it's down. But I'll tell you what, it's not going to happen all that often. Frankly, it's in the minority of the time. So you've got to be able to filter that out and adjust for other conditions. That's where I'm now going to give you something else for free. I already told you how to set up your charts, 9, 3, and 1 for trading the minis, and the formula for using that to try to determine the settings for other markets. But once you know those settings, how do you know whether or not you're going to be scalping or scaling? Well, this is the same formula that my own students use to determine whether or not they're going to scalp or scale out of a potential trade before they're in it. You don't wait till you're in the trade. That's too late. And here's a way to remember it. It's a teaching rhyme. That's called a mnemonic. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if the 1, the 3, and the 9, and that includes the tick charts, are trending together up or down, you have the potential for a really strong price move. You can expect to get a lot of follow through. Not always, but the majority of the time, a lot of follow through. So you don't want to throw away your trade on a simple scalp. You want an exit strategy that'll really keep you in the trade as long as possible. And that is called scaling out. Now, as I mentioned, you're not going to get this the majority of the time. It'll be in the minority of the time. So what about those other conditions? What if only two of those charts are trending together up or down? That's going to be the one you enter the trade on, and the next higher setting chart, which would be your 1 minute and or tick and the 3 minute chart. So if only the 1 and the 3 agree, you have the potential for something you could take a trade on, make some money on, but you don't want to stick your neck out too far because it's only going to be a weaker and briefer price move. So scalp it. You're going to just load the boat, meaning increase the size of your position if you want, and just go for a few ticks, for example. Okay? So if you now do these things, this will enable you to adapt and adjust with the proper chart settings and the correct way of managing and exiting your trade. This allows you to adapt and adjust to what the market can give you day to day, hour to hour, and literally minute to minute. So would you type yes if you understand this and you see how it can help you? Yes, David. If the 1 and the 3 agree, that is only the first step of 4 steps that I'm going to show you. You still have 3 more steps to go. You got to have very specific conditions about where, how, and when. Okay? All right. So if you do these things, and let's address something realistically. I sent you an email and it made a pretty bold claim that you could generate an average return on your investment ROI, that's your trading account, of around 2 to 4% on an average daily basis. Well, how can I come up with such a bold claim? First of all, I know we would all love to have that perfect equity curve, but let's keep things well grounded. First of all, I'm going to stick to the example I began with using the mini contracts. That's the nickname for the indexes, the electronic indexes, okay, like the Dow, NASDAQ, Russell, and so on. You are measuring them not in shares of stock, but in contracts. Kind of like options are using contracts. They're a unit of measure. Now, if you have a very small account, you probably can't afford too much as far as margin requirements. The $500 margin requirement says, hey, if you want to trade, say, 4 contracts, 500 times 4 means you need at least a $2,000 account. I personally would not recommend that. I would recommend overcapitalizing yourself so you're not trading with your back to the wall, because you can get very emotional and self-sabotage if you get a few losers. I recommend about a $5,000 account, which again is 1/5 the size of what the SEC requires if you want to day trade the stock market. All right? So this is on the low end of the spectrum. How do we arrive at 2 to 4%? If you saw every signal all day long, every day, Monday through Friday, and took all those trades and did that for a full month, 20 or more trading days, then what you would do is take the total amount of net profit, deduct the losers from the winners, what do you have left over, and you divide it by the number of days that you traded, 20 or more, and that will give you about $100 to $200 at least. Now, where do I get the 2 to 4% from? If you divide that 1 to 200 into your account size, 5,000, that's what you get the 2 to 4% from. Type yes if you now understand that. Okay? All right. Now, some of you are probably already saying to yourself, yeah, well, 100 or 200 a day, I need a lot more than that. That's just lunch money. Okay, if you have a bigger account, trade bigger size. But I'm trying to address the majority of the people who don't have fabulously large size accounts. But if you would like to build up your account and trade with the big boys, here is another free giveaway. If you start with a $5,000 account and don't take any money out, just leave the profits in there, and you build it up $2,500 more of profit to a $7,500 level. That's a net increase of $2,500. Well, if you were trading 4 contracts up until then, add a pair. So for every $2,500 that you build your account, just add another pair. You're not doubling, you're just adding a pair of contracts. So if you hold everything constant, you're now at $7,500. It should take you a little bit less time to hit another $2,500 of more profit. You'll be up to $10,000 because you're trading bigger size, and it'll take a little bit less time to make that much more money. So you'd go from 4 to 6, from 6 to 8, from 8 to 10 contracts, and so on and so forth. Hopefully this makes sense. However, if you are a real math whiz, you've probably already determined that by the end of the year, you could make some kind of obscenely large amount of profit, at least hypothetically speaking. 4,800% is what I calculated once, but that's not real. And the last thing I want is to hype this. I want you to keep yourselves grounded. Let's stay real. First of all, I don't think you're going to probably trade every single day and all day long. Maybe some of you are, I don't know. But I already, posited this as being part-time trading possible. So let's look at how that might work out if you wanted to be a part-time trader. So instead of 20 or 22 days a month, maybe if you cut it back to a more realistic 15 days a month, okay? And instead of trading all day long and making $200 a day on average, winners and losers combined, you cut it back in half. You just trade half a day. That's part-time. And then you're only making $100 a day, winners and losers combined. So that would mean you would net out $1,500 at the end of the month. That $1,500 is over a 30% return on your investment of $5,000. And if you've heard me say it before, I still like to say it again. Hedge fund managers would kill to make 30% return in a year, let alone in a month. And folks, we have actually done that in a single day. And that's on one market. If you're monitoring more than one market, your odds get even better. But we all want that equity curve, don't we? But you know what's a barrier between you and achieving that? You. We are not clones of each other. First of all, way too many vendors out there are offering what they have and saying, yeah, this works on everything. It's the same. Everything is the same. Well, I hate to break it to you. I already told you before, markets are different. They have personalities just like you and I do. We're not clones. So how do we account for that? Let's do what the professionals do. It's called benchmarking. With the TradeSafe system, I also offer my personal coaching as well as a full-blown online course. You get to be in my trading room and you also get to follow the course. And you get all the special tools that I'll lay out for you later on to help you run everything like a business. But before you graduate from this course, you know what you need? You need to be benchmarked. You need to establish a bona fide, valid, viable track record. What does that mean? Well, up until then, I wanted you to take every single trade, even if you or I thought it would be a loser. If it was a legitimate signal for an entry, you must take the trade. Of course, I want you to trade sim. I don't want you to risk money while you're acquiring knowledge. You need to trade money after you've established the track record. So don't get out in front of yourself. So up until you get benchmarked, you would take every single trade and you want to learn from those winners as well as the losers, because I give you a pre-formatted journal so that you can capture everything about each and every trade and you'll know why it didn't work. That will help inform you about what to avoid in the future, because the average amateur trader just jumps from trade to trade to trade and they don't have a clue on any consistent basis about why they're not getting the results they expected? Well, benchmarking will help you establish it. Here's how. Up until then, you took every trade. Now, you're going to look back on all of that information that you accumulated through journaling, and you will be allowed to select the best of the best. You're going to look at the context, things like support, resistance. Is there a report about to come out? Is the volume too low? Is price overextended? In other words, things that aren't part of the system but could have a negative impact on the system. You will learn which of these things could make a trade turn into a loser. If you think that it isn't going to be a high probability trade, don't take it. After you've had a statistically viable run of at least 30 or more trades, you'll then meet with me offline. We'll break out the spreadsheet that I gave you. It's pre-formatted and macroed. And I will ask you not just how much money did you make. The average student tends to make $3,000 to $5,000 over the course of 30 trades. But I'm also going to ask you, what was your percentage of winners over the course of those 30 or more trades? I didn't have a single student fall below 87% winning trades all by themselves without me pointing it out in the last 2 years since I've been collecting those statistics. So if you want to be benchmarked and learn how to do that and be able to replicate that when you start trading real money, you will want to know how to get benchmarked, and that's included as part of the Trade Safe package. So I've laid out the groundwork for you. Now it's time to show you an actual sample trade. So what I'm going to do is freeze the screen here temporarily and go to my charts. I'll bring back the screen in just a moment. Now, would you type yes and let me know you can see my charts? Okay, I need some more people. Okay, one or two. Want to make sure you guys are still here. Thank you, Michael. All right, so I'm not going to give you an in-depth tour of all of this. I just don't have enough time, but I am going to point out the basics here. Remember the rhyme, the 1 and the 3 need to agree, best as if all three agree? Dead center, this is the 1-minute chart. Here's the 3-minute chart, there's the 9-minute chart. How do I know they agree? At the bottom of each of these charts, these colored bands are letting us know if we're in an uptrend green or when it's switched right at that marker there to a downtrend, the salmon pink color. Notice that the 1, the 3, and the 9 all agree. I have the potential for a really strong price move when and if I get the remaining 3 steps out of the 4 steps needed to get into a trade safe trade. Now, I already told you we have a lot of volatility these days, so we're not going to take a trade on the 1-minute chart because the risk levels are typically too high. I'm going to use one of these 2 tick charts here, but it's not going to be either one of them right now because they're in uptrends. They need to be in downtrends. So what I'm going to do is turn this on, and I'm going to speed it up about 6 times normal speed. And when the color changes down below in that chart in the lower right corner of my screen, I'll freeze the screen, or at least pause the updating of the charts as you can see them. There we go. And it is now a downtrend. I'm pausing it. Now, the reason I paused it is because we don't need to look at these other charts anymore. The only reason I had all these charts assembled here, even though I've got more than one monitor, and by the way, you do not need more than one monitor to use my system. You can use a simple laptop if that's all you got, okay? I do recommend one external monitor of sufficient size because a laptop screen is pretty small, let's face it. But my point is, once you have determined what is the first step, trend agreement, at least the 1 and 3 agree, best as if all 3 agree, well, 1, 3, and 9 all agree, plus now I've got one of the tick charts trending. So that means I don't need to pay attention to any of this stuff at all. I can now narrow my focus. I'm going to maximize the window that holds this one chart, and that's all you're going to see. Now watch what happens. I'm going to turn it on, but before I do, I'm going to draw you a little simple diagram to tell you or show you what to expect. Downtrend price move, right? That's the first step. The second step is going to be a simple retracement or pullback to a moving average. Now, I have temporarily hidden my moving average because people always ask me, what's the setting? I get really tired of answering that question. But you may say, well, then how in the heck are you going to know if it's reached the moving average? Because right here in this data box, wherever my cursor goes, there's your readout. It shows the open, high, low, close, plus it'll show you the distance from the moving average. Like that bar is 22 ticks away from the moving average. Now, what I'm going to do when I turn things back on, you'll see bars keep plotting down, down, down. Then you'll see bars coming back up, up, up. It won't be a change in trend. It is not a change in trend. It's just simple profit taking while in a downtrend. Treat it like a stretched rubber band that is ready to snap back. Whoops. If I can try this one more time, there we go. It wants to snap back in the direction of the trend. But first, we got to get there and fulfill other conditions. So if other bars follow that path, and the last bar in the pullback, the one that's the furthest in the pullback and is either touching that moving average or is within a certain number of ticks of touching it, either below it or above it, I don't care, the readout will give you the number. That way you will have precision and you'll know as you get closer, moment by moment, tick by tick, you'll be able to prepare. You'll know if you are fulfilling that second step condition. Now, when you have, and I'll just draw a little vertical line here to pretend this is the last bar in the pullback, that would be your setup bar. The third step is you want some independent confirmation. What does that mean? Well, you don't want to just do the same thing again and again, a pullback to a moving average. You want something that's uncorrelated. So that would be this red line down here, which is an oscillator. I'm not going to tell you what it is, but all it needs to do is get overbought. Bingo. If it's overbought, it has satisfied the third step. No, we do not use that indicator to put us in the trade. You know, when it turns out of overbought, that's what most of you are used to. I don't use indicators to put me in a trade because they lag. We will use price action to do it, as you will soon see. All we need is just to get overbought. That's the third step. The final step is risk. And when we finally get a setup bar, I will show you the risk and I'll explain what the risk level tolerance is for the trade safe system. So once all four steps are fulfilled and the bar is just about to be finished, and in NinjaTrader down here, there is something called a counter. On a 1 minute chart, it's counting the seconds down, 59, 58, and so on. On a tick chart, it's starting at the top and it works its way down to zero, like at 144, 140, whatever the next would be. But we don't know what the next trade is going to be. It may have 10 contracts. It may have 100 contracts. We don't know. But when it gets just before zero, we will park the order. And where do we park the order? One tick under the low of that bar. So I'm going to put a horizontal line here representing where a resting order would be. It'll be a stop limit order. And then all you have to do is wait for price to move through it. It may be the next bar. You may have to wait a few bars. But let's say it's 2 bars later. and it goes through the arresting order. You're now in the trade, and then the automation takes over. So I've given you a simple diagrammatic explanation about what you're going to be seeing here in a few moments. I'm going to erase these things, and we're going to let it play out. And it's going to be at 6 times normal speed. I'm turning it on now. And when I start to see a pullback or a retracement, I will pause it as we complete the last bar. There we go. Now, you may say, how do you know that that is a setup bar, is fulfilling step 2? Well, let's put the cursor on the bar and look at the readout, this one right here. The readout says 0. That means it's actually touching the 21 period moving average. See, I even give you the setting away. Now, if it were one of these bars, you can see it's far, far away. It's 8 ticks away. As the bars get closer, it'll enable you to prepare and get ready. And that way you don't need to be all nervous and anxious. So this one is fulfill the second step. It's a certain number of bars minimum. It's at a very direct angle, 45 to 90 degrees. And it's got to be a certain number of ticks from touching, or it should touch. In this case, it did touch that moving average. So we fulfill the second step. However, we haven't yet gotten the third step. Look down here. It's not yet overbought. What I'm going to do is slow it down to normal speed, and I'm going to turn it on and then pause the moment it gets overbought. And boom. The moment it got overbought, another bar was just starting. So I would not have parked an order just before this one finished because I still didn't have that third step finished. Now that I have the third step finished, let's take a look at the risk. Risk is this right here, the blue label. How do we know the risk? Well, the readout there says 95. What does that mean? It is gauging it in terms of not the total risk for the whole trade, because I don't know how many contracts you might trade, maybe 2, maybe 200. It's a risk on a per contract basis. That way it's a level playing field. If you're going to scalp, the trade safe system will never ever let you lose more than $70 for each contract you trade. You may say, oh, that's too small. I'll be stopped out all the time. How is it possible then that I'm getting 87% or greater winners? That's because this is an extremely accurate system that allows you to have small stops. So it's not a myth. Well, what about scaling out? Where you have powerful trend and you want to be able to get into a trade, hit an easy to reach target, take some money off the table. That means half of your position. And you have a paid for trade, and then you trail a profit stop. Well, to do that exit strategy called scaling out, the maximum risk can go up to as high as $100 for each contract you're trading. What does this say? 95. Well, it's not even 100. It's less. You see, we don't use a fixed amount. If the bar is smaller, so is the risk. That's an extra bonus or plus that you get out of the trade safe system. It really helps with your reward risk ratio. If you've got a very small size setup bar, your risk could be as small as $35 or $40 for each contract. Amazing. So right now we do have a legitimate all 4 steps satisfied setup bar. Now we're going to park a resting order 1 tick under its low. Now the low of this bar, if you look in the data box, it says it's 1279.3. I'm going to put my cursor here at 0.2, and unlike using a depth of market, DOM as it's called, I'm going to park my order directly on the chart itself. It's so much more accurate, much more timely, and it's more convenient. Watch how easy it is. I'm just going to right click. Here are where the orders are grouped. It's always the last choice. Sell 4 contracts on a stop limit order at that price. Left click once and listen to your computer talk to you.
Order submitted.
Order submitted. Did you hear it? If you did, type yes. So now you can see here is our resting stop limit order. 4 contracts selling SLM stop limit. If I decide to change my mind before price hits that, I can always click over here and kill the order. I'm in full control. But we're going to let the price trade through it and put us into the market. So I'm going to turn this back on, and I'm going to speed it up to 6 times normal speed so we don't stay here all afternoon or evening. And you just wait until price trades through it. And once it does, I'll pause. Order filled, the computer said. Now I'm pausing. Here's why. Here is the line that was resting 1 tick under our setup bar. Now that you have had a fill, it's changed color. But here's more important. 2 other lines have appeared. This one is your stop loss order, and it is 1 tick above the high of your setup bar so that you don't lose more than $95 per contract. Down here is an order to take 2 of your 4 contracts off the table. This is a short sell, by the way, so you're going to buy back 2 of those 4. That's what that says, to buy them on a limit order. No slippage there either. You're in full control. You want it to reach that order so that you can make $100 and hopefully keep going and make some more. But these 2 orders are tied together in what is called a bracket or an OCO. One cancels other. Simply put, that means if we didn't make it down here and instead price turned around and hit the stop loss and you had a loser, yeah, we do get losers. What if you forgot to cancel this one? It might still be working in the market, and if you turned off your computer and the market reached that and triggered that order and you forgot about it, you might wake up the next morning and you could be underwater. I was $4,200 underwater 20 some years ago. That taught me a very expensive lesson. So I created this automation to tie these 2 orders together in what is called an OCO bracket. If you like that, type yes. Now, the next thing that's going to happen is this stop loss order, once an algorithm is satisfied, is going to get moved to where you could lose the full amount of 95 for each contract. It'll move it down to where you entered at break even plus 1 more tick. That way, that extra tick, which amounts to $20 total profit for the 4 contracts, will pay for all your commissions and still have enough left over for you to put into your account and show a profit. At least you can avoid having a winner turn into a loser. You will not see that even in TradeStation. So if you're using TradeStation, that's 20th century technology. NinjaTrader is 21st century technology. But what we want, of course, is to go through this order, scale out, and see if we can make the big bucks. So let's do that. I'm going to turn it back on. And as soon as it moves the red line, watch the red line.
Target filled.
Target filled. And the red line got moved down to 1 tick of profit. The green line disappeared because we actually did trade through all too quick. It was 6 times normal speed. It traded through the target. Now you have $100 in closed profits, plus 1 more piece of automation. That stop that got moved to 1 tick of profit, it was originally for 4 contracts. But after you scaled out and got rid of 2 contracts, you don't need 4 anymore up here. It changed it to 2. Automation, automation, automation. That is so important if you're going to be a successful day trader. Now that we have made $100 in closed profits, what's left? Well, let's trail a profit stop using this trailing stop indicator. Now, it hasn't yet even caught up with our stop. which is technically a profit stop now, not a stop loss. Here's how you connect the two. You just go through a menu and attach it to the indicator, and then you give it a 1 tick offset, check the box and click OK. Now let's turn this back on, and I'm going to speed it up to about 15 times normal speed. Watch what happens when it catches up with the red line and then gets past it. I'm going to pause. Every time a bar finishes, on a 1 minute chart, you got a full 60 seconds. But you don't have to do anything because it's done for you. On a tick chart, sometimes they're moving too fast for you to keep up with. That's why you want it to do it for you. But every time a bar finishes, this indicator is going to plot a new position. And it'll adjust itself like that surface-to-air missile analogy I used earlier. And right now it's holding back because we're in a pretty strong downward price move. But if this starts to fade or even backfill, watch for this to rush up and lock in the profit. So I'm going to turn it back on at 15 times normal speed. Still holding back a little bit. Uh-oh, now it's starting to stall. It's getting closer, closer, and the trade is over. So it took you out of the trade automatically right there. Let's look at the profit you made on this trade. I'm going to open up a hidden panel, and it's showing you that you made $680 on that trade. I don't know if you can see it. If you can't, just move the GoToWebinar control panel out of the way. You can drag it, or just take my word for it. But my question for you is, if you had something that was as clear-cut, totally mechanical, almost 95% automated, certainly the exit side is fully automated, and adapted and adjusted to whatever the conditions are, weak trend, strong trend. If you had all of this together in a single system that could make you this kind of money, type yes if that is something that you wish you could have in your toolbox. Give me some feedback. Let me know if you like what you see there. And I'll be hiding this in the meantime. Okay. So, TJ, you said maybe. What does the maybe depend on? Okay, what I'm going to do while I'm waiting for him to type, and I wasn't being facetious, I am genuinely interested in, what people are thinking. I'm going to now go back to the presentation and wrap things up here so you'll know exactly what's included in the package, okay? So where we left off was here. And just to recap, the TradeSafe system is a trend following system. It's almost 100% automated. It is the safest and most profitable way that you can trade today. And it utilizes tuned cycles-based multiple time frames to let you determine the strength of the trend instead of a one-size-fits-all, which is a myth, to allow you to adapt to what the market can give you. Well, the consistency of results, TJ, is a given. 87%. All of my graduates have achieved at least 87% winners. I don't know if that's consistent enough for you, but I don't know anybody who is doing much better than 70 or so percent on any consistent basis. Okay? But if you want to discuss price, time, and your degree of commitment, really, you should schedule time with me. And remember, it'll be a no pressure call. I absolutely will not try to twist your arm. I'll give you the answers that you need to make up your own mind, and I'll respect your intelligence. So to keep coming back to this presentation, TJ and everybody else, you will be able to keep your risk under tight control. You'll never lose more than $100 per contract, at least if you're trading the minis. So you also saw automation. Did that with an actual demo trade there for you. The whole thing is really, if you put it in a flow chart, it is a rules-based Boolean logic mechanical day trading system where your entry steps have real precision. The first step, trend agreement. The 1 and the 3 need to agree. And you have real clear alerts visible on your charts as well as audible. Your computer talks to you in English and lets you know whether you're in a trend or if you're in or out of congestion and so forth. When you have that first step satisfied, you then wait for the second step, the pullback, the retracement. And I showed you on the charts that you need a certain number of bars and a specific distance from the moving average, and you get an actual readout that gives you that placement ongoingly. And to provide you some additional confidence, you get independent confirmation from an uncorrelated source from the oscillator. That's your third step. Finally, you check your risk. If the risk is within 100 or less for scaling out, or 70 or less for scalping, you can park an order above or below that setup bar for either a sell or a buy. And then let the market take over and give you consistent results. Because I want you to know that I'm going to provide you with a real roadmap to make sure that you know how this works. Not just being in my trading room. I'm not going to be in a trading room where I say, woulda, coulda, shoulda taken that trade, or I'll hide that loser and hope they don't see it. I deliberately take losing trades because it's a teaching opportunity so that you can learn why trades work and don't work. But also, you're going to get far, far more than just a trading room. You're going to get all of these things. I'm not going to go through all of them here and read them. It would take too long. But you get my personal coaching for at least 90 days. Most people, they finish it in far, far less. The point is that you will ultimately, by the end of the time it takes you to benchmark yourself, then you will be graduated. Now, some people say, well, I don't know, 90 days is a long time. Well, you might finish it in a week or two. I already told you I taught an 8-year-old kid to do it. But the reason I want to take longer than a week or two is I want to watch you trade, because humans have emotions, and the psychotherapist in me wants to observe your lack of discipline and how to compensate for it, because I have built in some guardrails to help keep you on a structured path so that by the end of the course, you will not be an amateur who's using some great software. You'll be a true professional trader, okay? So if we start out making a direct apples to apples comparison with other true mechanical trading systems, there are really only 6 or 7 of them out there. I know everybody else calls their stuff a system, but they are exaggerating. They're taking a lot of carte blanche, if you will. The truth of the matter is that there are only about 6 or 7 authentic, true mechanical trading systems out there today for day trading purposes. The cheapest one is around $3,000, and the most expensive one is well above $10,000. No, I'm not going to ask you to pay anywhere near that, so don't worry. But let's just say, for discussion purposes, I priced what you would get from me at the low end at $3,000. But that would be a starting point, and we'll build some value from there. You get me in your corner as your personal trading coach. Remember, I've got 25 years of professional day trading experience, and when I consult with corporate clients, I get $500 an hour. You get me for the entire period of support during that time, not just in the trading room, but you also get me offline. You have access to me on the phone too. Almost nobody else makes that available. But to get you off to a really solid and quick start, we have recorded an entire weekend webinar. So you don't have to actually give up a weekend of your time. I did it with real students asking real questions, and I broke it into bite-sized chunks so that you can watch it at your convenience inside our password protected members area. And that members area, like all of the tools and the software, all of it is yours for life. You don't have to pay another dime to keep using it. You also get, so you don't have to create all these charts and everything from scratch, a predefined workspace with all the templates to make your charts come up just like mine. Now, it's a 5-minute process, but if for some reason you get confused, guess what? I have a full-time support desk. That's right. Remember, I'm not a one-man band. I have a full staff. And I have a support technician who can remote access into your computer and assist you with getting it installed. He's a very, very patient guy. Everybody loves him. You've already seen the trend indicator, which by itself is easily worth $300. That talks to you and shows you when you have a trend and how strong is the trend and so forth and so on and so forth. Beyond that, though, you will want to be able to follow those 4 specific steps and use the other indicators that are part of the package to satisfy what it takes to then be able to place an order. Once you're in the trade, automation takes over. You had already pre-selected one of 3 exit strategies. There's $200 of additional value. You saw one of those exit strategies during my live demo trade. Now, I mentioned to you this thing called benchmarking, where you build your authentic track record before you graduate. And I did mention, you might have forgotten, that typically the average student will generate around $3,000 to $5,000 worth of profits. So if we factor that in, that's valuable because that gives you a strong sense of confidence about what you can keep making when you start trading your own account. And by the way, when you're in my trading room, I prefer to call it a coaching room, by the way, rather than a trading room, because it is an educational environment where instead of typing questions like you do now, you get to use a headset with a microphone and you can talk to me anytime you want, even in the middle of a trade. I don't mind. And if you really need some help, I can actually watch you take trades on your charts and coach you through any problems you're having. Nobody else in the whole industry even does that. This gives you the assurance that you're doing things perfectly. So all of it's recorded, everything I do and say, plus everything that you or your fellow students do and say in the coaching room. And by the way, it's not a huge room with hundreds of people like others where you're competing for my attention. Typically, you're only going to see at most 6 to 8 people in there at a time. So you are going to get highly personalized coaching. You also get some special tips, tricks, and special techniques videos to go along with it. And I told you I wanted you to be a professional trader by the end of this course. That means I want you to run your trading like a true business. So I'm giving you an authentic business plan, not just to map your goals, but to give you guardrails to keep you out of trouble. What's the most you're willing to lose in a day or a week? Or how many losers in a row? What are you going to do? Dig a deeper hole and keep trading? Are you going to stop trading? What are you going to do? I require you to put it in writing, and I review every single business plan that every single student submits. And of course, to keep you on track, you're going to journal every single trade you take so that you learn from it, and to track your stats, fully macroed spreadsheets so you always know just how good your performance is. And last but not least, as I mentioned before, probably the most important thing other than having a true system with an edge is discipline, trading psychology. You will get, as part of this package, a really powerful technique that'll help you forge diamond hard discipline that'll keep you from revenge trading or analysis paralysis. If we add this all up, look at that. You're getting over $11,000 worth of real value here. Am I going to charge you that? Of course I wouldn't. Normally, what I have charged in the past, and people have told me it's seriously underpriced, I've charged $39.95. But I'm not even going to ask you to commit to that today. We're going to cut that for a limited time. That's until midnight Pacific time of next Wednesday. That's a full week from now. We're going to slash it in half from $39.95 to $19.97. So if you want to know if you're really qualified to do this, you want to know by booking some time with me. Sure, I know you may say, I'm ready, I want to buy, and I'll show you how to do that in a minute or two. But frankly, most of you are going to want to get some more questions answered. And this is why I do something nobody else does. I don't have a salesperson to try to close the sale. What I do is I trust you to make up your own mind by asking your own questions. You will get a link to having a full hour of my time, and I'll answer your questions truthfully and candidly so that you feel your time was well spent when it's all said and done. Also, you may say, well, still 1997, as I'm trying to remember his name. Maybe it was David earlier. Oh, no, it was TJ Trader. He said, price was a factor for him. Well, we have payment plans. So I'm going to give you a full week. I'm not going to pressure you to commit right now. I don't do that. I don't believe in that kind of stuff. I hated it when people did it to me when I started out, and I don't want you to think you're going to have anybody doing it to you. So if you would like to jump to the head of the line and schedule some time with me, see my calendar, the best date and time, write this down, daytradesafe.com/apply now. You'll of course get it in the email that follows up later on this evening. And you click on that link and you'll be able to schedule time with me. When you do meet with me, what happens? Well, of course, you got to book the call first of all. And I want to reassure you that if it's filled up fast, because these slots do fill up quickly, if you run out of time and there are no slots available by next Wednesday, I will still honor and respect the discount. You can still get it because I know you made a best faith effort. And then you call me. I don't call you. You call me. You'll get instructions in the email. You'll get reminder emails. And because I want you to use a cell phone, provide that so I can text you. We will send automated text reminders to let you know, hey, you got an appointment with Michael. Please keep those appointments, because I'm setting aside my time as a developer, not as a salesperson. So please have some respect and keep your appointment. Okay? It'll be a real valuable conversation. You'll get all your questions answered. And when you come away, you will be confident about whether this is for you. But since I know some of you are still concerned about the price, let's take a look at how flexible we can be to assist you in getting started. First of all, if you're a U.S. citizen and you don't want to pay all of it up front, I recommend the PayPal option. One of the buttons on the page that you would go to when you click on that link to join TradeSafe is a PayPal button. Now, you don't need to have money in a PayPal account, and even if you don't have a PayPal account, it takes a couple of minutes to create one. But the point is, they will do a soft credit check, takes a couple of minutes, and if they like you, they will give you 6 full months to pay them back. If you pay them back in 6 months or less, they won't even charge you a penny of interest. So essentially, you've got free money for 6 months, unlike a credit card, which will charge you interest. So I recommend the PayPal option. Try it first, but if that's not a good fit, well, you can either use the credit card or you can use our in-house payment plans. But because I'm assuming risk on these in-house plans, I do have to charge interest. So please be sure and book that call. Get all your questions answered so that you know and you're not just guessing and making some kind of emotional decision, here's the schedule link again, daytradesafe.com/apply now. And remember, if it falls after the deadline, I will honor the discount, even if it does go after next Wednesday. Pick the best date and time that works for you. Don't wait, it fills up fast. I will not pressure you, I promise. And before you talk to me, at least watch the replay, because I need you to be familiar with what you saw today. Because if you're like most people, you watch too darn many of these webinars and you'll have forgotten everything. I can't recreate the whole webinar on a phone call. So at least watch the replay. And yes, I do trade this system. It is my primary source of income. The reason why I created Day Trade Safe 20 years ago, David, was because my accountant told me I wasn't getting enough deductions for internal revenue. And she had me form an LLC, and because I was a performance coach before and a psychotherapist, she said, why don't you do that? And then that way you can run all your expenses through TradeSafe. Does that make sense, David? All right. So if you're one of the people who already knows that this is the right choice for you, you want the automation, you want the flexibility, you want to be able to have, most of all, the consistency, 87% or greater winning trades, then write this down, daytradesafe.com/I want in. That's all one word, I want in. And that will take you directly to the page so that you can join TradeSafe without having to wait for an email. So I want to thank everybody for being here today. There is that link one last time for scheduling time if you don't want to wait for the email tonight. Does anybody have a final question? A final question. I will wait about 30 seconds, so type quickly, because I've actually run over and I don't want to disrespect your time. No questions? Okay, then you can get all your questions. Oh, is this an annual? This is a one-time. You will not have to pay another dime. This is yours for life, TJ Trader. Okay? You're welcome. Hey, Tom, would love to get together with you and see how life in Colombia is these days. Maybe drop me an email and we'll visit. Okay? All right. And everybody else, please do schedule time with me. Get your questions answered. And hopefully you will see the advantage of getting rid of discretion, getting rid of subjectivity, getting rid of inconsistency, and finally making money on a consistent basis the trade safe way. So trade safely, everybody. Bye-bye.